Hello everyone, I'm glad to welcome you all to a new year, a new financial trading year 2022, a year with a lot of opportunities and a year of more expectations, a year that we all have actually longed for. As we all know, a new year requires new energy, new mindset, new goal, new focus. You guys have long anticipated for this Zoom meeting, and finally it is here. Many of you have told yourself last year that 2022, this is my plan, this is what I'm going to achieve. 2022, this is what I'm going to do. No, let me wait till 2022. 2021 was to the learning phase, and the 2022 is the earning phase. So whatever your plan is, the 2022 guys is here, and this is the right time to start. This is January 2022. Now, it is high time you give answers to this question if you must make the best of 2022 trading year. What do you tend to make of this new trading year 2022? What do you want to do differently from what you did last year? What type of account will you be using? Are you going to be trading your own money, or you're going to be trading for a prop firm? That's a question you want to give answer to. Now, if you are trading for yourself, what broker will you be using? And if you be trading for a prop firm, what prop firm will you be trading? I think these are some of the questions that at this point in time is very essential that you sit yourself down and give serious thought to it, so that you can be able to make the best use of this year 2022 and equally make good profits. Now, in today's video, we'll be addressing some areas in which all traders must take their time to look into, so that we will not just become a forex trader or a productive forex trader, but a consistent forex trader. And that's why we are starting with trading plan. Now, there's a saying that says, he who fail to plan to fail, and that is true. Like I said before, now the question you want to give answer to, what do you tend to make of this new year? And if you have already gotten yourself a trading plan, kudos to you, but you have not done that, I think that now will be the best time for you to do so. Now, trading plan is very essential because you have to plan your goal for this new year 2022. And when we're talking about trading plan in forex is different. It's not different from any other plan that you know. Those who build houses, they have their own plan, their bidding plan that will guide them to be able to complete that particular project or house that they are building. So also too, when it comes to forex traders are expected to have their own trading plan. This trading plan is a set of rules that is developed by you as a trader that you are going to strictly adhere to, that is going to help you, it's going to guide you, factoring in risk management and the personal psychology, so as to enable you to achieve your set objective, which is to remain as a consistent trader. Now, a trading plan is vital to your success as a trader because it gives you a set of proven rules to follow, even when your emotions are trying to make you trade impulsively. Now, have this in the back of your mind that having the trading plan does not make you successful. But if you want to become a successful forex trader, having the trading plan is a must. So no matter how good your trading plan is, it won't work if you do not follow it. So you must be disciplined enough to follow your trading plan that you have taken yourself, you're taking your time to draft, and you must strive hard to ensure that you follow it. And the good thing is that those traders who are disciplined to follow their trading plan are the only traders that survive year after year. So that is why at this point in time, after this class, it will be very vital that you as a trader, you have to draft your own trading plan that is going to guide you for this year 2022. I've already drafted mine. A lot of my students have already drafted theirs as well too. And in this class, in this Zoom class, I will probably be showing a preview of some of those trading plans that have been drawn by them, and you can use that as a template, as a sample to equally draft yours, so that that will guide you for trading, possibly making a lot of mistakes. And also too, trading plan is not rigid. It's flexible, so there's a time limit. You go back to your trading plan maybe after a month, to look at your trading plan, look at areas that need amend, look at areas that are doing very well. You can equally make amend to some areas so that you can remain as a consistent and a profitable forex trader. So with that being said, are there benefits of having a trading plan? Yes, of course, there are benefits of having a trading plan. Trading with a plan makes your trading to be more easier, simpler than when you don't have one. Having a trading plan equally reduces your stress, which means you having enough time to rest, and that means good health to you. And having a trading plan equally helps you to gauge your overall performance, identify problems that may occur while you are trading, and helps you to equally make or effect a correction if need be. A trading plan equally helps you to prevent yourself from many psychological issues that you might be having if you are trading without a trading plan. Trading plan, if strictly adhered to, will equally help to reduce the number of bad trades that you'll be having. That you will see as time goes on the sample of the trading plan I will be showing to you guys. Now, a trading plan will equally help prevent irrational behavior in the heat of moment. A trading plan will equally help you to control the only thing you cannot control is yourself. Now, trading plan will instill a large measure of discipline into your trading, and this is very essential because as a trader, we are not coming to the market as a gamblers. Gamblers come there wanting to risk everything that they have now to make it big. But a forex trader is coming in there, committing just a percentage of his account to trading each day, and is just there to make some decent money for himself, and off he goes. So it's very vital that you have a trading plan. And lastly, a plan will enable you to trade outside your comfort zone. Good. So trading outside your comfort zone, a trading plan will enable you to be able to control that and know when to trade outside your comfort zone, and that is where discipline comes into it. So see trading plan as a GPS that guides you to your destination. So if you look at it from that angle, then definitely it's going to help you to be able to achieve your set objective, your set goals that you have written down for this year 2022 that you intend to achieve. So that's why I was asking that question: what do you intend to do differently this year than what you did last year? There must be something that is different from what you did last year, and that is why you have to take out that time, sit down, look at some areas, some lapses you had last year, and now while drafting this trading plan, this is not the best time for you now put them into writing after identifying them. Please kindly take note of this as we made mention of them. As you can see in your slide, if you have your paper and biro, you can do it to jot them down. Because after now, what you're going to be seeing is a slide that I'm going to list out those. The slide I'll be listing some of the samples that I've drawn, and as well as many of my students have equally drawn. And from there, you can be able to use those ones to recreate your own using your intended risk capital. So first and foremost, what must be included in your trading plan is one, intended amount to invest. Now, it's equally called risk capital. How much you have to risk, how much you have to invest in trading. Now, this comes into play when you are already done demo trading. You have found out that good, you have the necessary skill sets to trade a live account. Good. At that point in time, the first thing you need to do is to have a live account under a broker. Having done that, the next thing you have to do is to what? Is to invest money in your live account. That's the money you're going to trade with. Hence, it's called what? Risk capital. So how much do you intend to risk? If it's 500, you write it down as 500. If it's $300, write it down. If it's $100, write it down. If it's $1,000, write it down. If it's 500, it's 1,000. Any amount, you have to write it down. Now, having done that, if at this point in time, it's equally important to know if you are going to be a funded trader. If you are going to be buying a funded account, good, you have to state that you're going to buy a funded account. How much? What's the worth of the account you're going to buy? You have to state it there. Now, you're going to see a slight difference in the trading plan of someone who is trading his own capital from that of the one who is trading what? A funded account. That I will explain with passing of time. So now we have note that the amount we tend to invest, we have taken note of that. Now let's move to the next one. Name of the strategy you tend to use. Now, we have a whole lot of strategies that you as a trader can use, though many persons tend to use, who's that now? Some other person. Please mute or Somebody should interfere with our sound. All right, so I've been mentioned that all those who are trying to connect should, please use their real name. Don't come in and be logging. Okay. Please, who's using GT? Who logged in using the name GT? Please, who log in using the name GT? If you are using GT, please, can you rename your device to the name you're having on the channel, please? Thank you. So, having identified that, the next thing to look at is name of strategy you tend to use. We have different kind of trading strategy. Others are trading breakouts. Others are trading bounce from either psychological level or from support and resistance level. Others are equally trading the breakout from a trend line. Others are equally trading. There are different form of strategy. Others, many traders uses. So you must be able to clearly identify the strategy that you yourself, that you are comfortably using, that you have the expertise to use. Identify that strategy and write it down. Just as you see on the right-hand side there of the slide, you see a man taking his time to pen down these plans, these areas that we are trying to talk about now. He's trying to create his own trading plan. And it's going to be noteworthy that you write these things down, not having them in your head. You write them down. This is my trading plan 2020. And it's going to guide me for this particular month to this particular month. So write it down and let it guide you. So the name of strategy you are going to be using, you are going to write it down, like I made mention of. So you that have been trading, definitely you know the strategy that you are good at using. So take the time to write it down so that that in itself will be the only strategy that you will be sticking to. Now, the third, we are going to look at the currency pair to trade. What currency pairs do I actually want to trade? Will I be trading commodity? Will I be trading metal? Will I be trading volatility index? Or will I be trading synthetic indices? Those ones are pairs. So you have to write it down there that these are what I'm going to watch. These are the pairs I'm going to trade, and you're not going to deviate from it. So specifically write it down. So what it therefore means that if a particular pair or two or three pair you're going to trade does not present you opportunity at a particular day or at a particular week, therefore means you're not going to what? You're not going to trade. If you have that mindset, therefore means that what? You are adhering strictly to what? Your trading plan. And that means you are disciplined enough to remain as a what? As a forex trader. The fourth on the list is what? List of indicators you tend to use. Many persons have different indicators that they use. Others trade naked charts. Of course, there's no trader who does not trade using an indicator, and I will prove you right. Now, why do I say so? Many persons have trend line on their charts. You yourself, you are the one that draw your trend line. Others use price action, but not just using price action alone. They have price action in conjunction to other indicators, either Boligo band, other the RSI, other it can be what do you call it, average true range, and many others. So long you are incorporating them, you are what? You are using indicator, except you are using a naked chart, such that you are just trading purely price action and what? And judging from what? From the candlestick patterns or candlestick trend that have been drawn there. Now, the fifth one is your daily target. How much do you intend to make daily? How much do you intend to make daily? So this daily target largely depends on the amount that you're investing. So somebody is investing $100. It's unrealistic saying I want to make what? $50 or $80. It's not possible. So the mindset of a gambler largely depends on what? On a forex trader who is here not to gamble, but to trade and stay long in the market. So your trading plan, your trading target must be very realistic. So how much are you going to be making? Is it 2%? Is it 3%? 2% or 1% daily? Is it 2%? Is it 3%? You have to write it down there. Now, your primary time frame you're going to be using for your analysis, is it 1 hour, 30 minutes, 5 minutes, 20 minutes? You are going to write it down there. But don't forget, the time frame you are going to be using largely depends on the kind of trader that you are. If you are a day trader, if you are a scalper, if you are a swing trader, if you are a position trader, your time frame you are going to be using largely what differs. So have you identified the kind of trader that you are? Write it down there. That is the what? This is the time frame I'll be using for my analysis. We call it top-down analysis. So I'll be using 1 hour to gauge the overall direction of the market. I'll be coming to a lower time frame to use 5 minutes or 15 minutes to do what? To pick my what? Pick my entry. Now that talk about point number 7, entry signals. The entry signals is that what will form my entries? What will form my entries? What should I be looking at when I'm entering what? Each particular position? Am I looking for confluences? Am I looking for breakout? Am I looking for bounce? Entry signals. You have to write it that there. So the risk per trade, like I've mentioned before, what is the risk I'm risking per each trade? Is it 2%, 3%? Of course, point number 5, talk about your daily target. So your daily target can be $500 or $100, but you are not making that $100 from just one particular trade that you're entering. So if you're entering per trade, you are entering, let's say $50, $50, $50, $50, and your target is $500, meaning that you're going to trade up 10 positions to get what? 500. So that 500 is your daily target. Then the risk per trade is what will make up what now? Your daily target. Point number 9, maximum number of trade at a time. This is very essential. To many persons, once you enter a trade position, they see the trade going against them, though with martingale, but there's a principle behind that. Now, you come into that position again, the market still keep going down, you enter again, still keep going down, you enter again. Many of them trade recklessly, even without stop loss. As a result, it will reverse, the thought of it will reverse, and eventually the market will close them out on margin call. So you must be able to identify clearly the maximum number of trade that you can conveniently trade at a time. And that equally largely depends on your point number 1, which is the risk capital that you are going to invest. When to take profits, a lot of persons who are trading the forex market, they have different take profit strategy that they use. Others use 20 pip strategy, others use 15 pip strategy, others use 30 pip strategy, others use 40 pips to 100 pip strategy, but largely depend on the kind of trader that you are. Now, if you are a scalper and your intention is to trade 15 pips, or you're using a small account, let's say $100, $150, $200, and your intention is to make $50 a day, good and fine, then you should be looking at minimum of 10 to 15 pips per each position. So if others are there, still waiting for the market to come to 50 to 30 pips or 100 pips, you seeing 10 or 15 pips, you ought to leave out the market. So maximum number of trade at a time matters a lot. You can be a consistent forex trader, but you can end up giving the entire money you have made back to the market if you cannot clearly identify the maximum number of trades you can do you can trade at a time. It can be advantageous to you if all trade you enter goes into your direction, good and fine. But how many times does that happen? So clearly identify that in your trading plan. Point number 10, when to take profits. I've mentioned that before now. Now, the exit signal. Now, if you are having a running trade whereby your take profits is a ratio 2 to 1, such that your take profit is 20 pips and your stop loss is 40 pips, that's ratio 2 to 1. Now, if it happens that way, therefore means that, okay, I'm using a ratio for my exit signal. If I'm having a drawdown of having a loss on the position for like 30 pips, then I should close that, I should exit that particular position. Now, if you can be able to clearly identify this, when to close your trade on loss, if you can be able to clearly identify this on your trading plan, alongside the others we have mentioned from point 1 to point 11, then what you have done, you have successfully drafted a trading plan. And the ability for you to stick to it is what will now make you to sail far in this business called forex trading. Now, when to close your trade on loss, and after you have done that, the next thing to this, you need to test your trading plan. Now, you test your trading plan on where? You are going to test your trading plan on on the demo account. You have to demo your way to success. So you have to back test that trading plan that you have developed. You are going to try it out on a demo account and see how successful and how productive it is. Then after which you can now commit your life, your risk capital or your real account or your real money to it. Now, there's another point that is mentioned here. Say, what should I avoid trading? Or when should I avoid trading? This is very, very important. In as much that all of us are coming to the forex market to make money, bear in mind that you are going to make loss in one trade or the other. Many persons are not going far in the forex trading market because they have already accepted the fact that they are always going to be profitable, forgetting that we are trading in a market that carry high level of risk. So as a result, a high level of knowledge is equally required. But in spite of that, having the right knowledge, having the right tools, having everything that is needed in your hands, there's no knowledge, there's no trading plan or trading style that is a holy grail. You are going to accept some loss. You are going to make some loss and accept that fact. Once you can be able to accept that fact, you're going to make loss and you accept that fact, then you are willing to go far. And that is why this question is very essential. When should I avoid trading? So am I going to trade every day? If I'm going to trade every day, what am I going to see on my chart that, okay, good and fine, what I'm seeing here, no, this is not a good day to trade. So all those ones is going to be included on your what? Is going to be included on your trading plan that you're going to draft. So having a written trading plan is essential to successful trading, especially if you are prone to trading impulsively. That are for traders, generally, they always fall prey to this because it's human after all. When you are in trade and you're making profit, you're making profit. First trade, hit your take profit. Second one, hit your take profit. Third one, hit your take profit. There's this confidence you're going to be having that before you see, you start increasing loss size, even without anybody telling you, because you would have been asking yourself, if I've taken the first trade with one loss size, I would have been making this amount now. And if you decide to increase the loss size, the second trade, and you having twice the amount you made in the first trade, you say, wow, you might say, okay, maybe the third trade, I'll use 1.5 loss size. And if you keep increasing like that, what's happened? You end up giving everything you have made back to the market. So that is why the trading plan is going to help you, is going to guide you so that you end up remaining as a consistent, profitable trader. Like I said, having a trading plan alone is not sufficient to become successful. But if you want to become a successful forex trader and stay long in this market as a consistent, profitable trader, then having a trading plan is a must. So let me show you now at this point in time. Let me show you a sample of a trading plan if you have not seen one before. And I believe from now on, you will now be able to draft one yourself. So here's an example. I believe you all can see it. Now, this is a trading plan from January to February 2022 that was developed by one of my students. Now, if you look at what we have identified before now, the basic points that, or the basic ingredient that must be included in the trading plan, all of them is what is being outlined here now. Now, if you look at what is before you on your screen, you see the risk capital or the amount you tend to invest is $1,000. The currency you tend to trade is just one particular currency, and that's what, and that is good. What time frame will you be using? He said we want to use 1 hour, 4 hours, and 15 minutes time frame. And why are we having 3 time frame here? The time frame you are seeing here definitely shows that it's going to trade as what? As a scalper. How do we know that? It's going on a 1 hour time frame and a 4 hour time frame to get a top down of the overall trend of the market. And after doing that, identify its trend, identify the patterns that are found in the market. It comes down to a lower time frame on a 15 minutes chart and what? And from there, you're able to identify his what? Identify his entry position. So that's why we're having 3 time frame stated here. For those who are position traders, swing traders, you're not going to be seeing H1 and H4 here. You are going to be seeing a monthly time. You are going to be seeing a monthly time frame. You're going to be seeing a daily time frame and an hourly time frame. That's what you're going to be seeing here. So you on your own end, depending on the kind of trader that you are, depending on the amount you are having, then you are going to draft something like this for yourself. Now, what indicator is it going to be using? It's going to be using trend line. It's going to be using support and resistance. It's going to be using psychological level and price action. So these indicators are what it's going to use, and that is what informs his entry. Now, going down, strategy is going to use, retest of broken levels, and it's going to be trading confluence. Of course, confluence is where 1 or 2 levels, they cut across each other, either your support and resistance cutting across the psychological level, or your trend line cutting across the support and resistance level. That is what is called what? Confluence. So he says it's going to be trading confluence and retest of a broken level, either a trend line or a support and resistance. That's the strategy. Now, going further, what is his target? That's something that's of interest to us here now. Okay, he said his target is how much? $100 target. So he's investing $1,000 and his daily target is $100. Does this seem realistic, guys? I need your answer on this. Please, you can use the raise hand feature if you want to speak at this point. I need your comments. Is this daily target, is it realistic? we say it's realistic because if you look at what he's talking about here, his intention is making $100 from $1,000. And that would be how many percent if you are being asked? How many percent is $100 from 1,000? Yes, Salvation.
Which is 10%.
10%. So 10%, is it realistic or is not realistic?
It's a realistic one. It can be done.
Good. So it's achievable. That is why it's being realistic. Thank you so much for your comment, Savi. So it's very realistic, can be done, can be achieved. And that is why I will tell you that this trading plan is something that can be strictly adhered to and is going to help you to become what? A profitable trader. Now, his target is not making 500, it's not making 400, it's not making 300, it's looking at 10%. And definitely don't forget that this 10%, this $100 is not going to be made from just one trade position. It's going to be an accumulation of trade, which we are going to see a number of positions is going to trade. So let's follow along. Now, maximum trade at a time, it's saying you're going to be taking 2 positions at a time. And if he's taking 2 positions at a time, he's going to be using what? Martingale. So I think I've done that before in one of our videos that we did, as well as another Zoom class that we had, also quality 2. I made mention of how you can martingale while you trade. But martingale simply means your first position you're going to be taking is going to be a low risk trade, and the other one that will follow, if the trade eventually did not go in your favor at a set period of time after breaking the zone that you're expecting it to reverse, then you come into your second position with a higher loss size. So that in itself is called what? Martingale. Now, risk per trade is risking 2%. It's going to be risking what? 2% of 1,000. That is what it's going to be risking what? Per trade. Now, what are his exit signal? When is he going to close his trade? He says he's going to close position on loss when breakout occurs, which is clearly visible, and price action what? Confirms it. So himself, I've already outlined this here, that whenever a breakout occur, or it could equally be fundamental spike, maybe fundamental took place and a massive spike, definitely is going to what? Is going to exit his position that he have opened. So this is equally written down here on his trading plan. Now, when not to trade or when to avoid trading, we did mention it before now. He said when trend cannot be clearly identified, when the market does not satisfy my trade conditions, when I'm not emotionally stable, when I'm on a business trip, when I have no good network activity, when I have no good network, okay, when I'm engaged with a lot of what? Activities. So these are the reasons he gave when not to what? To trade. You too on your own end may have your own reasons, either similar to this one or slightly different. So it's very vital that you write them down and try as much as possible to follow them. Now, when to take profits. His take profits strategy says it's going to be what? 20 to 30 pips strategy. For multiple position, I will martingale. Okay, good and fine. I've said that before now. Now, 20 to 30 pips strategy simply entails that each trade position is going to be entry is going to be not more than what? 30 pips or what? 20 pips. So if the trade goes for about 100 pips, or you go for about 150 pips, or you go for about 200 pips, that is of no interest to him. His own interest to what? Is to look for that 20 pips, see that 20 pips, and exit his position. That is his own goal. So that is why himself wrote it down here. Loss size that he said to use. For one position, he said he'll be using 0.3, and for multiple positions, he'll be using 0.5. So you on your own end too, you are going to equally what? Draft it down. You are going to put this into writing. And like I mentioned before, your trading plan is dynamic, it's not fixed, it's something you are equally going to go back to. After you have made a lot of progress, you have made a lot of success, you are going to go back there and make some adjustment to it so that you can continue to keep that pace that you have achieved in order for it to remain as a profitable forex spot trader. He said, what to do once daily target is met? He said, I'll close my laptop and phone and I'll engage myself with other activities and stop trading. And that's a very good thing to do if you are running a profit and if your trading system or strategy that you're using is actually paying off. Because the moment you keep your eyes on your laptop or your phone or your MT4 platform is open, definitely I believe you are going to give everything you have back to the market, because that's human nature. Now, what's the first thing to do before picking his trade daily? He says he's going to check fundamentals if there are news using my Forex Factory website. So that I equally adjure you all to do. Before you look for any trade position each day, go to what? Go to forexfactory.com and identify the news releases that we have for that day. most importantly, take a look at the currency pairs that has been affected and the timing that is going to take place. Please do that. Now, on the Forex Factory website, there's something that will be of note that I equally showed to you. A lot of persons are not using it in the right way. So I believe you all can see what I'm sharing with you on your screen, right? So this is the website, forexfactory.com. Under there, you go to calendar. When you are in calendar, you are going to see the news releases that we have for the week. You're going to be seeing Monday, Tuesday, Wednesday, Thursday, and Friday. You're all here. Now, you're going to be seeing under the area currency, you are going to be seeing, I'm coming, let me get, all right. Now, this currency, these are the currencies that is going to be affected at this particular time that you're seeing here. This is the timing I found here. Now, what are the news released for? This is what is being mentioned at here. Now, what is the focus? Previous reading they have before now, the actual, the focus, and the previous, these are here. And these figures are what's of important to us as a trader. This here we read minute to each of the releases that we are having. The impact it has on the market will all be shown here. But where I want to drive our attention to is what we are having here. As I'm going to now. If you are seeing here, you are going to see a time here, 3:51 p.m. Many a times, because you are entering the website for the very first time, you're not going to be seeing 3:51 there, either your phone or your laptop. But many a times, on your phone, you are equally going to be having a lot of errors because if you're using a laptop, it refreshes on its own. Now, when you click on that timing, as you can see, it will take you to a time zone. Ensure if you are from Africa, ensure you're having +1 here, West Africa. Ensure you're having GMT +1 West Africa, not no other +1. It must be +1 West Africa. Then your time format should be what? AM or PM, and do what? You save settings. So when you do that, you will see now that say your synchronized time is now what? 3:53 p.m. So the time you are seeing on your website will now harmonize with the time you are having on your laptop or your phone. After you have done that, then you can now go back to the calendar itself, and you'll now be able to see clearly the exact timing that those news releases are actually going to what? They are actually going to take place on your own local time that you're having in your country that you reside. So now I've done that now, and you find that today being Monday 17th, if you look at all the news releases that we have in here, you find that majorly almost all of them have all run out. 3:14, okay, you're having one of 4:30 p.m. card. That one is still yet to play out, and the one of 10 p.m. NZD yet to equally what? Play out. So those are the two news that are left here. So before you place any trade, endeavor to come down here and look at the impact that you're going to be having in the market. Either it's high impact news, low impact news. Establish that clearly before you pick your trade. Now, if you look at it now, today Monday has been a very fruitful one for those who are trading the USD pair, either gold, either GU. Why? Because we're not having news release for USD because today is what? Bank holiday, as you can see here. Today is bank holiday. So being bank holiday, we are not expecting much from the USD. Volatility will probably not be that much, as you can see, bank holiday here. So USDs are asleep, and a lot of traders, they are making the markets, having known this fact, having come here to the website, and they have checked, and they have seen that today is a free day for them. So hence, they are all there picking on the can from the market. Now, if you go to on Tuesday, you are going to see other action that plays out. So that is for that. Now, let's go back to the slide I was sharing before now. The last thing you want to do is say what to do when I'm having streak of losses. So if you're having losses, you enter your first trade for that day, the first trade hit your stop loss, second hit your stop loss, and the third trade hit your stop loss. Will you continue trading just like that, having losses 1, 2, 3, 4, 5, and you still keep heading? No. Now, your trading plan will have to tell you what to do when you have a streak of loss. What will I do? At what point should I stop trading? Now, if you look at what this trader have drafted down, I say, once I have 2 streak of losses on open position, I will stop trading for what? For that day. So this is very essential. And if you have taken time to actually draft it. Be disciplined enough to follow your trading plan. If you do that way, it's going to guide you, and it's going to help you to remain as a successful forex trader. Like I mentioned before, having a trading plan alone is not going to make you successful, but if you must remain as a successful forex trader, you must what? You must have a trading plan alongside other factors which you are equally good to take care of. Having been done with trading plan, I want to go into price action and why you should be a scalper. But before then, I want to give room. If you have any question to ask on trading plan, you are very free to ask on trading plan before I proceed to the next point we have on our table of contents. Is there any question you want to ask? Now is the right time for you to ask. Okay, it seems nobody have question. So I believe everything is well understood. But most importantly, like from the samples I've given out now, try as much as possible to draft one for yourself and put it to consideration different factors I've equally outlined alongside that sample trading plan that I've equally shown to you guys. So now that we are done with the trading plan, let's move to something different now, talking about scalping. Why I decided to bring this subject matter is going by the pool I threw to you guys, asking what type of trader you are. Majority of people there on this group, all of them accept the fact that they are what? They are a scalper. So if you are a scalper, then why do you choose to be a scalper? What do you think? What are the qualities that is necessary for you to become a scalper? And how should your trading be different from those who are not a scalper, like day trading and the rest of them? So there must be something that informs you to become a scalper. And there are some things, and there are a lot of things that you need to do that must be different from what day trader, position trader, and swing trader are doing. And that is what we are going to outline in the next few minutes. So, but then, who is a scalper? And why should we scalp? It's a very important question. So, a scalper is a trader, or is that trader who look for opportunity in the forex market, having identified those opportunities, they jump to trade, look for 10 or 20 or 15 pips as the case may be. Once he sees those profits, off he goes. So he just jump in and jump out in a few minutes, 10 minutes, 5 minutes, 4 minutes, picks his profit and off he goes. So it's scalping in itself, or as a forex scalper, is short term. It's basically a trading strategy, a trading technique that just involve you entering to the market, look for buy position or sell position for a short period of time, and off you go. Now, in as much that scalping can be very profitable, if only you can nest your skill, so also too goes with the pros. As he have his pros, he equally have his own cons. So for you to be a successful forex trader, you must adhere to the street rules, or the street rules or strategy that goes along with it, because there's a key in making profit in any of those categories you find yourself, either as a scalper, either as a day trader, either as a swing trader, or a position trader. There are street rules that must be adhered to in order for you to be able to compound more profits there. So the advantage or the benefit that come to you as a scalper is that, as you see it being highlighted here, it means that you don't have to worry about overnight trade, because you jump in with 10 minutes, 15 minutes, 20 minutes, or in what scenario, if the market does not have volatility, an hour you are at. So that equally puts your mind at rest. That equally reduces your psychological problem. So no overnight trading. All profits and losses can easily be summarized at the end of the trading day. So you sleep comfortably. There's no point thinking or sleeping and you are dreaming of position that you have open, or waking up in the middle of the night trying to check your trade to see if it's going against you or not. So that's why many persons choose to become a forex scalper. So if you are a forex scalper, definitely there are other things that moves you, that informs you to become a forex scalper. So at this point in time, let me hear from you, that all of you that are connected here, let me know the type of trader that you are. If you're a scalper, there are a question I want to ask, so that all of us can benefit and learn together. First and foremost, I'm having a guy here named Andrew. Andrew, can you please unmute your mic?
Okay.
Yes, nice to have you here. So the question we are asking, are you a forex scalper? Do you scalp or you're a day trader?
I'm a day trader.
You're a day trader, you're not a scalper. Okay. Andrew is having network issues, but he have already expressed himself out that he's a day trader. Okay, good one. Fine, it's a good one. We are still going to come back to him. It's an interactive session. We're going to learn. I'm going to see why he chooses to be a day trader. All right, who is using GT? You logged in with the name GT. Can you please unmute your mic, please?
Hello.
Yes, nice to have you here. What's your name, please?
Tega.
Okay, Tega. Why are you supposed to use the name Tega and log in instead of using GT? Okay, go ahead. So, what type of trader are you? Are you a scalper, a position trader, a swing trader? What are you?
A scalper.
A scalper. Why do you choose to become a scalper?
I like to go inside the market, probably spend 2 hours, 3 hours for the day, instead of looking at the screen for more than one day.
Okay.
Or probably having a sleepless night.
Okay. That's good. So how's it turned out for you being a scalper?
Yeah, it has been wonderful. I'm still on demo, sharp.
Okay, that's a good one. That's very inspirational to us. Okay, right. Thank you so much. Let's hear from that person here. Who is this person called Off Young that is connected? I think on your phone. Can you please unmute and talk to us? Hello.
Okay, we can hear me.
Okay.
I hope we can hear me, please.
Yes, I can hear you. Yes, to an extent, I can hear you. Nice to have you here, sir.
Yeah. Thank you very much, sir.
Yeah. So we're all here to share ideas together. I'm asking a question. What type of trader are you? Are you a scalper, a day trader, a position, or a swing trader?
I say a day trader.
Okay, a day trader.
I have done a little bit of scalping, but it doesn't give me discipline. It plays on my emotions.
Okay.
Sometimes I think I have missed a setting. I have something that should have been good, so it keeps me on my toes, looking for the next wave. Okay. So I find out that I cannot discipline myself to trade exactly and step off after the. So I'm more into day trading.
Okay, that's a good one. That's a good one.
Essentially on my table.
Okay, that's a good one. So the next question I want to ask at this point in time, have you been trading using a plan? Do you have a trading plan? Can you hear me?
Can you hear me, please?
Yes, I can hear you now. I was asking a question. If you have a trading plan, do you have a trading plan that you adhere to?
No, not effectively.
Okay.
I have a practical knowledge of the trading plan. I use little snippets now and then, but I'm not disciplined to stick to it.
Okay. All right. Thank you so much for sharing your idea with us. All right, let's move to the next person who is connected here. Who is connecting with Rebecca Emmanuel? Can you please unmute? Rebecca Emmanuel. Is it Emmanuel, woman? Can you please unmute and share ideas with us? Rebecca, can you hear us?
Yes, I can hear you.
Okay. Nice to have you here. So, question I'm asking, the question I've been asking others, the same question I'm equally asking you now. The question is, what type of trader are you? Are you a scalper or a day trader or a swing trader?
I'm a day trader.
You are what?
Day trader.
Oh, yeah, day trader. Oh, okay, that's good. What currency do you trade?
Indexes.
Okay, indices, okay. So how has it been playing out for you?
Not so good.
Okay, not so good. All right. Do you have a trading plan? Have you drafted a trading plan before? Or do you have a trading plan before now?
No, I don't.
I don't. Okay, all right. That's good. Okay. All right. Thank you so much. We are equally good. We're going to come back to you guys in a short while. So let's leave you at that first. The last person, not the least, is Salvation. Savi, can you unmute your mic, please?
Yes, sir.
Yes, nice to have you. So the question we are asking others is the same question I'm asking you. What type of trader are you? Are you a scalper, a day trader, or a swing trader?
I'm actually a scalper.
Okay, scalper. So how has it been playing out for you so far, being a scalper?
It is good, and because I have a whole lot of anxiety, so leaving my trade to run for a day, I most likely will not sleep throughout the night. So to help myself using my usual trading plan, I'm making use of my stop loss and take profits whenever it hits, whichever hits first hits. So we will manage the loss regardless, or the win as well. Yeah.
Okay, so that's a good one. So you have equally tell us that you are telling us now that you have the trading plan also?
Yes, I do.
Okay.
I do.
All right. So are you disciplined enough to follow that trading plan you have drafted?
To an extent, yes, but human emotion, which includes greed, can sometimes be a big factor. Sometimes we tend to see certain opportunities that we would not want to let pass away. And then when we get into the market, that's when we get into trouble, because most times we don't go as we anticipate it to go.
That's true.
So, yeah.
All right, thank you so much. Thank you for sharing your ideas with us. So let me now proceed. So now I can go to say that we have a whole lot of traders here. We're having a few scalpers here. Others say they are swing traders. Others say they are day trading. All right, it's a good thing. But one thing we must note is that you cannot just wake up one morning and tell yourself that I want to become a scalper or you want to become a day trader when indirectly the strategy you are using is what is scalping. So being a scalper is just like having a 4 quadrants. A quadrant where you have a scalper this way, you have a day trading this way, you have swing trading this way, you have position trading this way. So these 4 traders, they are all looking for trading opportunities, but their own mindset differs greatly. So if you as a scalper, you're having a mindset of day trading, or you as a day trader, you're having a mindset of a scalper, then you're not going to go far. So now is the best time for you to identify clearly the type of trader that you are. Let's forget about 2021. I know you make a lot of losses, you make a lot of mistakes. Many of us blew accounts and stuff like that. So this is 2022. So now it's time for you to become very focused, become very serious. So identify clearly the kind of trader that you yourself want to be, so that you can end up becoming a consistent forex trader. Now, let's look at the scalping, and I will probably shed more light on day trading. So like most of you have already spoken on, many persons decide to become a scalper because of the anxiety that comes to it. They want to sleep well at night. They just want to go in, quick profit, to go out. And forex scalping is equally good for those who are having other source of business. So they just want to go and spend that 1 hour or 2 hours, pick some few profits from the market, and off they go. I know if somebody wake up around 5 o'clock in the morning, trade from 5 o'clock in the morning to 8 o'clock in the morning, close his laptop and go to his usual work that is equally engaged to. So there are different mindsets, different reasons why a lot of persons choose to become what a forex scalper. But why I'm talking about forex scalping is that in the long run, it all depends on the assets that you are trading. The assets you are trading will greatly determine if you choose to become a scalper or if you choose to become a full day trading. So each of them have their own pros, each of them have their own cons. So, but going further, let's look at the qualities that's expected from a scalper. And that will take us to the next slide. Quality of a scalper, it demands what? Dedication. It demands what? Discipline, very strong discipline, a lot of self-discipline. Discipline to follow your own trading plan that you have equally drafted, disciplined to your own emotion, able to control your own emotion. You have to be very, very disciplined. Now, speed to execute scalp deeds. Now, don't forget that you are looking for 15 to 20 pips. So whenever the market gets to a particular level, you must be very, very quick to execute that trade. You must be very, very quick to execute that trade, because each bounce from a particular level, a particular zone, is the money you are looking for. So while others are aiming that 80 or 100 pips, allowing the trade to run for a particular day, you are there, you also make that 15 or 20 pips. So if you don't enter quick enough when others are entering, then you might end up missing that deal, because you might not be looking for or praying for a reversal to take place, which in itself, will not take place. Now, to be a good scalper, you must have good knowledge of supply and demand, good knowledge of support and resistance. Then lastly, ability to identify key zones in the market alongside psychological levels. So these are qualities of a scalper. And this quality of scalpers equally go hand in hand with those who decide to become day trader. Although the higher you go, requires a high level of patience. But as a scalper does not have that patience. So you want to go in quick with speed, pick what you want and go out. But on this one, a high level of knowledge is highly required. And equally to scalpers to need to have good account size. The account size need to be robust other than those who are day trading. Because those who are scalping might be trading a particular asset, let's say GU or GJPY, for example. Now, a scalper might be using 0.5 to make decent profits, but a day trader may be using 0.1 or 0.08 and be aiming 100 pips. So you can see now that the same different type of trader, same currency pair, different lot size. They are looking for what? They are looking for profits. So one is short term and one is long run. So that's how it works. Now, back to time frame. A scalper uses time frame. The time frame they use to scalp is they go to what? They use the 5 minutes, 15 minutes, 30 minutes, 1 hour time frame. Like I've said in when we're talking about the sample or a sample of a trading plan, the time frame that the trader uses for a scalper, they go to a higher time frame like an hour or 4 hours or 30 minutes to look at the overall direction of the market and scale down to 5 minutes or 15 minutes to look for look for their entry position. So these are the qualities that is required from you as a scalper. So also to different qualities is equally needed, or it's also to the equally other same qualities that's equally needed from a day trader. So just slight adjustments that are needed there. Now let me head over to my MT4 platform and try and demonstrate something here so that we get something clearly. Let me go to my, okay, let me use this. Okay. Okay. What you can see here, I believe you all can see this slide, my platform.
Yes, we can.
All right. So now, let me now demonstrate to you now the different mindset that are here now. Now, look at the market now, it's falling down nicely. Now, here's the market heading down to, the market is coming to a zone which I have tested before now. And let me get my pen. Okay. All right. So the market, there's a zone which the market have tested before now. It's a large zone, and the market is coming here for the third time. So this is the first attempt, second attempt, third attempt, and fourth attempt. Now the attempts were done not on same day, but on different dates. So now the market is equally falling to this zone now. Now, if you are as a trader or as a scalper or as a day trader coming to this trade now you have already drawn your trading plan and you said your trade, your risk per position is 2%, and equally to your take profit is going to be what? 20 pips or 15 pips. Okay, now let's see how this can be done. Now the market is coming to my zone now, which I can confidently tell you is a good trade to enter. Let me close that. I'm coming with my trade here at this point in time. I'm going here on the 0.05. Let's wait for it to fall down a little bit, and we're going to look for that 15 pips. Okay. All right, it's still coming. All right, beautiful. All right. Now we have entered this trade on the 0.05. Now looking for 15 pips and 20 pips. This is about 15 pips, 7.25. Okay. Now we are telling ourselves now that if this trade should go down here, okay, if the trade should come down here, then I'm off the market. That's 20 pips strategy that I'm talking about. Now, if you as a scalper, you are putting your take profit here, bear in mind that others too are equally coming to this trade. What are they equally aiming at? For a day trader, they will be having their take profit now placed at here. Why are they aiming this zone? Because they are judging based on the highs and the lows of what? Of the day. Now, this is the highs, this is where the market, this is the highs of this market, and this is the lowest low of the market. Let's get screen. I don't know if I can. Okay. Let me get my pen so I can draw something. All right. So this is the highest high, this is the lowest low. Going forward, this is call it the highest high for that day. Now coming down here, this is the highest high for that week, highest high for that week, highest high for that week. So a day trader would have already told itself that good. In as much as this trade is going to run, and the market have bottomed to the lowest low, it's very, very sure that this trade will definitely reverse and come down to what? To hit this, to close the trade at somewhere here, either at a psychological level of 1820.00 or at what? 1822.34. That would have been his mindset. So now, but you as a scalper who is wanting to look for that 15 or 20 pips and run off from the market, you are not bothered. So what you do at this point in time is for you to just place your take profits at 20 pips. Look for 20 pips or 15 pips, depending on how best you can analyze the market and following your trading plan. I'm going to place this now on a 15 or 20 pips. Thereabouts. Let's see. Okay, good and fine. So I'll leave it there. After doing that, the next parameter you're going to do is what? To put your stop loss. And then coming down here, since the trade are very well executed, you take your mouse, hover your mouse to your entry price and drag it down. So I'm comfortable placing it here. Why am I putting it here? Putting it here because I'm judging the last candlestick that have been formed. This is the last candlestick that was formed here. This is the last candlestick that was formed here. Okay. So this is the last. Oh no, not that. So this is the last candlestick that was formed here. If you look at this candle that is formed here, a smaller candle is formed here. This is a candlestick that created the turn, and it coincides with it. It equally coincides with the other ones that are found here. So that gives me a strong level that these markets will definitely reverse at that particular zone. So my stop loss will be placed slightly below it so that the market will not fall down, or price will not fall down close to this area, close me at and do what? And reverse. So know where to place your stop loss is very, very vital. So now the trade is at play. I'm still going to allow this trade to run because I'm very confident it's going to hit my take profits. So your mindset should always be geared toward the kind of trader that you are. So if you're a scalper, trade as a scalper. If you're a day trader, trade as a what? As a day trader. So don't confuse yourself trying to trade the two. Today you are looking for big wins. Tomorrow you're looking for 15 pips. Tomorrow you're looking for 30 pips. No. So just try to play along what you have already drafted or your trading plan. So I believe that settles that. So clearly identify the patterns that are found in the chart, and that's where we're going to now. After now, we're going to talk about price action. I'm going to be telling you more about how I was able to pick out this trade and how you yourself too can equally identify these patterns that are play on your chart. They don't just happen by themselves. There are a lot of things, factors that the market will be. And if you can be able to understand what this market trends with, what controls the market, what pulls the market, then you're having a winning order yourself and you can be able to place trades on your own confidently. So now I'm going to allow this trade to run. So let me stop this. So here is where we are. So these are the qualities of a scalper. And we have equally mentioned that, equally talking about the time frame that is necessary for you to use for a scalper. Now, some of you said you are a day trader. Now, if you are a day trader, what time frame do you use? I would like to ask at this point in time so that I can know how best to help you out. Because I myself, I trade as a scalper. I scalp the market a lot. I can look for 20 or 50 opportunities per day. But I equally fit out my trade. I always stick to high probability trades. So not all trades I trade, but I stick to high probability trades. And that is what I'm equally going to show to you guys now. So somebody said it's a day trader. Can you please notify us by using raise hand feature or mute so that you can share with us the time frame that you use. Let me see if it's correct or not and know how to guide you on that.
Yeah, that's me.
Okay.
The analysis is done 1 week, 1 day, and entry is at 4 hours.
Okay, entry is at 4 hours. 1 week, 1 day. How long does your trade run?
Yes, sir.
How long does your trade run? Per each position you're opening, sir, how long does it run?
Sometimes
it
goes overnight, but most of it in the space of 24 hours.
Okay. That's what I want to establish, because if your trade oftentimes runs for 2 days, run for 3 days, it therefore means you're not a day trader. So if it's a trade that you open in the morning and like to run, so many times
I've not had to stretch it. Yeah.
You said what?
No, go ahead, coach.
I didn't get your last words you said.
I was saying that I have not had to stretch it for 2-3 days like that.
Okay.
It's usually across 24 hours.
Okay, good and fine. All right, that's a good one. So to others who are day trading, it's better for you to go to a higher time frame and go to a higher time frame, like you mentioned, your daily time frame or your weekly time frame. You identify the patterns that you're actually looking for there, then scale down to a smaller time frame and use. So to many persons equally doing it, you can equally use your 4 hours time frame. The most important thing is that the higher you go, the more you can easily be able to identify the patterns and equally draw your trend lines. Because when you go to a weekly time frame or a monthly time frame, you have a whole lot of price history for you to draw your chart from. So that's the more reason why we're going to a higher time frame. So 4 hours daily time frame or a monthly time frame, that in itself will enable you to give a comprehensive view of all the candles, all the weeks, all the months, and it will show you the weeks of the candles. So at that point, you can easily do your analysis and come back to a lower time frame. That's a good one. So, but it's essential that if you're a day trader, please work hard to ensure that your trade does not run overnight, because the market, as we all know, is not controlled by us. So there are a lot of factors, there are a lot of events that may take place overnight, depending on the currency pair that you are trading, that may end up creating a new turn of events. Before you wake up, you find out that you're already in a massive loss, or the market is going against you for a second time. So that we should bear in mind. So now let's go to, if there's no question on the quality of a trader, we now switch over to price action. If you have any question to ask at this point, you are very free to ask or go to price action, because I want to ensure that we move swiftly and see if we can be able to close this class by 5 o'clock. So if you have any question you want to ask, you can at this point notify using your raise hand feature, notify me, and you can proceed, sir. I saw you unmute your mic.
Yeah, a question. Yes, a question, please. The qualities of a scalper.
Yes.
Discipline.
Yes.
Now, if in the trading plan, you decide that you're going to take 5 trades, and after the 5th trade,
yes,
you still see opportunity that fulfills your expectations, and you take it, doesn't that take away from the quality of your discipline?
Yes, of course.
And
yes.
Doesn't that?
Yes. If I get you right,
the general concept.
If I get you right, you're saying if you're on your trading plan, you are saying you're going to trade, let's say 4 trades, Abi, and you end up having those 4 trades. You already traded the 4 positions. And
yes, please.
And you decide to, on that good opportunity present itself, and you decide to go in the 5th one. Yes, if it happens that way, and that's how I get you correctly, what you have done at that point, you have already gone astray from your trading plan. So you can be productive. You can actually be productive. Maybe the fifth one can actually hit more. You can hit more profitable than the fourth one. Good. And you can even go, I said, as going to the sixth trade, seventh trade, and you see yourself as being a master of the market. But with passing of time, you won't last, because since you're already having that, you're having that mindset, you're not disciplined enough to follow your trading plan. Equally to, you'll not be disciplined enough to control your emotion. As a result, you give everything back to the market in no time soon. So discipline cuts across all levels of forex trading. So even funded traders, they call it funded traders for what? For disciplined traders. So you must be very disciplined. You must be very disciplined when it comes to forex trading. Whether trading your money or trading for a firm or a funded firm or whatever, you must be disciplined. If you're not disciplined, that means you can't stay fine in the forex market. A lot of persons who come into the forex market, you see them blowing their accounts, is because they're not disciplined enough. One, they don't know what they're coming to do. Two, they don't have a set rules that is guiding them. And they don't have a strategy they are working with. They can't be able to control emotion. So those are many, many factors which they cannot be able to put together. And that is why it's making them to be having streak of losses. So it's a good question you ask. So if you have a trading plan, just stick to your trading plan. But like we mentioned, the plan is not fixed. It's dynamic, such that after a month or two, it's essential you go back to it, visit it, look at areas that need correction, put correction to it. If it has been productive from January and February, and there's need for you to increase your loss size based on your equity that has gone up, then it can equally affect that. So that is for that. So let's move over now. If there's any other question, you can please unmute and speak out, so that we all can be carried together in one piece. Okay. There seems to be no questions. So let me move to the next slide. Let's talk about price action. I know many of you have heard about price action before. Price action is not something that is new to forex traders. Many of us have watched a video on it. Many have heard friends saying they are trading price action. So many persons, to their understanding, they just understand price action as a way of trading, as a technique or thereabout. So, but today I'm going to share more light on price action, because going by the pool I equally carried that on the channel, I was equally trying to look at the areas in which traders find difficulty in, talking about money management, talking about psychology, talking about price action and many of that. But from what I've seen there, a whole of traders are finding difficulty in what? Price action. So let me spare this time now to talk more on price action. After we have done that, I'm going to equally give you a highlight using the MT4 platform, how this price action, how you on your own can be able to work on your own trading strategy, in addition to what? Price action. So just as you can see in your slide, you see price action trading is a technique or trading style where a trader makes decisions based on price movement on the chart, as opposed to what? Relying on lagging indicators. So in this scenario, you're not trading with indicators. It's a trading technique or a style whereby a trader is basing all his decision in what? In the movement of price. You're making reference to historical past records. And that is what you are using to what? To predict the future results of where the market is going to. That is why you often hear people say forex is all about what? Predicting and what? Predicting, forecasting. So you predict the market from the figures that you have with you before now. So we project and we predict. So that is the reason why we are going to hourly time, to a higher time frame, daily time frame, and monthly time frame, so as to give us a clue of what has happened in months past, in years past. Then we can now say, okay, if this have happened before now, definitely it's going to repeat itself again. Now, price charts reflect the belief and action of all traders trading the market. For example, if the price has made a sudden move higher, then the price action chart will clearly show this, because you are all looking at what? At the movement of a price. So all traders in the forex market, they are looking at the movement of price in one way or the other. It now depends on the strategy you are looking at. If not, everybody looking the MT4 chart or MT5 chart, they are all there to what? To analyze the movement of what? Of price. And that is why it's named what? Price action. Now in bold, you say as price action trader, the only thing that you are looking to do is to analyze the chart in front of you. For example, you're looking for what? You're looking for trend, you're looking for patterns and what? Potential what? Trade setup. So you are trading what you can see in front of you and not what you think would happen as when you are trading what? Fundamentals. So having note what price action is equally of note to know that price move based on what? On trends. And the third point is history always repeats itself. Now, looking at the second point, they say after establishing a trend, the future price movement will more likely stay in the same direction. Until a trend bends, it is your friend, and it's often one of the best ways to put the odds in what? In your favor. Now, many persons say the trend is your friend, but not at all times the trend is your friend. Now, let's look at, let me go to my MT4 platform now. Let me share that with you now. Okay, stop share. Go to my MT4 platform and share with you now, guys. Now, do you see the trade we have entered as it take profits? The only trade I entered just right before you have hit $9.15. Now, why are we able to hit this take profit? It's because I know instinctively well, without missing words, that the trade will actually what? Will get to that level we have entered. Now, what now happens? Let's look at something here, which is of note here. Now, our entry point was here. Our entry point was here. And I positioned it on 20 pips. That would have been here. Okay, you're good and fine. 20 pips is here, guys. 20 pips is here. 20 pips is here. Okay. So 20 pips is here. Yeah, this was our origin. Now, you as a scalper, for the fact you entered here and you aim 20 pips, you're already off the market. Not so. Now, you're off the market. Now, while you have gone to sleep, just like I am now, I've entered, I've taken my profit, I'm off. The day trader is equally praying that the market goes beyond where it is now and close at where and get either here or what, or here. Those ones are aiming for 40 pips, 50 pips, or 80 pips. So it's very, very important that you know the kind of trader that you are. Though definitely the markets or the price may eventually push up to that level that you are equally anticipating. But it definitely requires a high level of knowledge for you to do more analysis as the market keep climbing in profit. Yes, the market can equally push down below your entry price and you give out everything you have made back to the market. Now, looking at trend, like we made mention of, now look at what you have before you here now. Do you see that this trend is a falling trend? And do you equally know? Look at this trend here from what you are seeing here, though more or less like I'm drawing a trend line, but it's a trend anyway. Now look at this trend here that you see here before you here. This is a trend. Now let me go to more higher time frame. Now, if you look at the overall direction of this particular asset here, from here down here, you find that this market was actually moving up at a point. It was above this trend line, going up and up and up and up. So if you have entered from this origin here at 1764.60, which is the origin here, there goes my pen. All right. So if we have entered here on the origin here, now if you have been on this trade for that entire day, you entered here and the market closes here, you would have made hell of profits. Now the market equally fell down, and if you have entered here and allowed the trade to run throughout that day, you would have equally made hell of profits. Now, same applies, but the market will definitely not remain at the top forever. Definitely will fall down, and that is what happens here. It falls down, and it rises up again. So the market will always bend. The market will always fall down. That is why the saying goes that the market is not what? The trend is not always your friend. So if you are trading alongside the trend, many times you're going to experience whipsaws even before you start going your own direction. So if you are to trade along with the trend, good and fine, then you need to harness your skill. You have to work on yourself so that you can be able to filter at fake moves so that you can be able to make more profits on the long run. So this is traded by the trend, and having drawn the trend or identified the trend, you come to a lower time frame, let's say 1 hour, for example. Now look at what you have drawn and see, okay, and see where the market is currently sitting at this point in time. Now look at this trade we have entered now. Do you now see that the trade has been running, is currently running 33 pips in profits? So most likely this trade might end up coming to 1820. That would have been 50 pips of profit. So if you have Martingale or I try to Martingale, on my own end, I would have made more profit than what I've done now. But if my trading plan says trade one position at a time, then what I've done is the right thing to do. But if your trading plan is trade two position but Martingale, then I have to reduce my loss size as it goes. Now I've used 0.05. If I'm to use two position, I'll use the first one 0.2. The next one will now be what? 0.3. So that one will close in 20 pips, the round will close how many pips? 40 pips. So if you are doing that way, you are applying what is called Martingale Principle. So that is the trend. Let me go back to our slides. Identify the trend as it goes. Let me come to this slide again. Yep, I think this is it. Yes, this is it. So the price move based on trend, and once you're able to identify the trend, if you can be able to analyze the trend perfectly fine, then many times it's always good to trade along with the trend. But like I mentioned, the trend is not always your friend. So don't always trade along with the trend. So let your trading strategy that you have developed, let it now be the basis for you picking your entry position. Let it not be the basis of you telling when to enter the market, not you and trading impulsively using your own wisdom or knowledge you have upstairs. Now, the third reason why we try to use price action is because history always repeats itself. The market is being moving by, its market is controlled and moved by humans. So humans are always repetitive in their motion. So as a result, it's always expected that history will always repeat itself. And that is why we're using what is called chart patterns, because these patterns are patterns that are always repetitive. They are patterns that have been formed before now, and they will continue to repeat themselves for many years to come, just as they have been repeating themselves over many years ago. So those patterns that have been formed before now, they are very relevant to our trading today, because it tends to tell us how the markets have played out before now and how you're going to play. So it's more like a story which have different episodes. So you having watched episode 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, from all that have happened before now, you can perhaps be able to predict what will happen in the other episode, even if you have not watched it. So that is what price action in itself is playing out. So when reading price action chart, it says we are reading traders' behavior that is showing itself through what? Through pattern. The reason this pattern is going to repeat itself is because people and traders are going to repeat the same habits when putting what? Input in similar situations. So just like we can be able to predict the movement or predict the way our friends behave, predict some certain individuals by their behavior. So also too, using price action, we can be able to second guess where price is heading to, why it's heading to that particular area, and why? Because before now, looking at our chart, the market have equally played along that particular level. You find it difficult in breaking a particular level, a particular zone, or always obeying a particular set level, or using indicator a particular value that is found there. So that is why we decide to use price action. So now let's look at price action in 3 different dimensions: price action, trending, and using candlestick patterns. Candlestick trading, pattern trading, and combining all of them together alongside indicator. Now, the one that is very common to you guys is this candlestick. All of us know what candlestick is. Now, in candlestick, we have the bearish and the bullish, which is the buy and sell. Now, on your candlestick, if you have heard the word candlestick Bible, we have different kind of candlestick. We have the hammer, we have the hanging man, and many of them. We have the Marabuzo candlestick, we have the pin bar, and many of them. So these candlesticks that you see, these are equally price action. These are what many traders look on the chart. They identify those patterns on the chart. They look for candlestick behavior, look at candlestick change. They look for them and they use that one to inform how they trade, to pick their trade. So if they see an inside bar or they see a pin bar, many traders do what? They look for those pin bar and use that as their entry position. Having been able to understand how the pin bar moves and the candlestick that follows immediately after the close of the pin bar, those will now inform them to do what now? To look for their entry position. So if you must be able to trade price action, or if you must be good at trading price action, therefore means that this pin bar, the different candlesticks that we have, which are not mentioned here, you have to have basic knowledge of them. And as a trader, it's not expected that you must know all of them. Just pick the few that you know you are very conversant with, that you can be able to interpret, that you can be able to predict how the candles move, though you are not always going to expect 100% profit anyway, like I mentioned before. So always be ready to accept losses that comes with forex trading. But then if you can be able to take your time and study this candlestick, it's going to help you in the long run to be able to make good profits from the forex market. So I believe there are many candles that we all know before now. Remember, we have the doji candlestick, we have the spinning top, we have the spinning top candlestick, then we have the hammer, we have the hanging man, and we have the other types of what candlestick I mentioned. So that in itself, if you are trading that one, you are trading what candlestick, and that's equally what price action. Now we have the pattern trading. The pattern trading, these are patterns that are formed in the chart, which you have to, on your own, using a naked chart, you have to be able to identify them clearly. We have the double tops, we have double bottoms, we have the triangle patterns. On the triangle pattern, we have the symmetric triangle, we have the ascending triangles, we have the, what have you, different kind of patterns that are found there. Now, we equally have the head and shoulder patterns, we have the rounding button, we have the 1, 2, 3 pattern, we have the ABCD pattern, and we have the harmonic patterns. When we talk about the bat pattern, the Gatling pattern, and many of them. So these are different patterns, and these patterns is not all equally essential that you know all of them. Just pick one or two. There are many persons who trade forex basically using one pattern. They look for head and shoulder pattern. Others look for M pattern, which is double top and double bottom. They look for M pattern. Once they see that pattern, alongside with their money management, off they go. They wait for confluences to enter and off they go. So you must not know all price action. You must not know all of them. So pick one or two that you know you are good at best and stick to that one. Then if you can be able to know double top, double bottom, you see combining price action and indicators. Now, you might be able to draw trend line. You might be able to draw trend line. You're good at drawing trend line. You can be able to draw support and resistance, identify your supply and demand zone. That's a good one. If you can be able to do that, then maybe you have other indicators that you are good at using, maybe polygon band or using the EMA, which is the exponential moving average, using your values either 50 or 30 or 10 or 20. You are good at using that. Good and fine. You can incorporate that into your trading strategy. Other ones that you have, you can incorporate them alongside with your what? With your price action. Now, if you can be able to effectively do that, then it's going to help you to be able to trade the forex market without relying on your forex robot or other indicators that may be telling you buy at this level or sell at this level. No. What we're all doing here is the ability for you to interpret what you're having on the chart. Then read meaning to it, then take your what? Take your trade and make money from it. That's what we have been spending the whole time trying to look into. Now let me go to my MT4 platform now. Having seen that, let's look at this price action, how it plays out in our MT4 platform. All right. Now, like I mentioned before, price was actually moving to where I was. So if I've placed my take profit at this level, which I was supposed to have done, you have given me 50 pips, but trying to clearly tell you how I scalper trade. Now you can see the wicks that have been formed here. Now let's look at what we have in here. This is a good chart, and many of you know I trade only the good pair, only strictly I trade only good. So that is why you see my chart is not filled up with a lot of currency open. I'm only having good and GPGPY and G-odd, which the G-odd I will close anytime soon because I don't actually use it. Now, what do we have at play here? Now, if you look at the candles that are found here, you see candle with long wick. You will see other candles that follow with small body. We come down again, see another candle with smaller body. All these candles you are seeing here, the old candles you are seeing here, they're not here for fancy. You have to read meaning to them. This candle that I found here, you have to read meaning to them. You have to read meaning to this candle I found here. Now, these candles here tell you consolidation took place because of lack of what? Volatility at this point in time. That is why the market was ranging at this particular zone. And this is a type of trading that all forex trader must desist from, because if you are finding yourself in this kind of level, definitely expect a spike that will take place. And surely the spike was what happened here. And that was why gold started to trend downwards. If not, the market have been consolidating a particular level before now. So what candlestick dominates these charts? If you're a forex trader, the first question you must ask yourself, the particular currency pair I'm trading, what pattern dominates that chart? If I'm trading indices, what pattern dominates that chart or that particular currency pair I'm trading? Is it the W pattern? Is it the M pattern? Is it double top, double bottom? Is it a head and shoulder pattern? What pattern are clearly found there? What kind of candlestick is dominant in that chart always? That if I should flip from a week, I must see that pattern. I'm going to see those candlesticks. Which of those candlesticks are you going to see at play there? That's the first thing you must do before picking out the currency pair that you know how to analyze best. So it's not about you just coming up, waking up, and just, okay, I will be trading odd USD. I'll be trading GBP pounds. I'll be trading synthetic indices. I'll be trading US30. Now, before doing that, there must be something that you can see that every other trader who is not trading that currency pair is not seeing. So if you can be able to have that edge over the market, that you can go to interpret to a reasonable extent, 80%, you can be able to interpret to what that particular currency pair or that particular asset that you are trading on, basically, what the story is trying to paint out from previous week to where you are, you can be able to interpret it and equally tell us what might happen possibly in the following week to come. Then that particular currency pair is the best for you to trade. And that particular pattern that is working for you is what you are going to strictly adhere to. So this is good. I'm going to speak more. I'm going to speak. Okay. Infinite Sources Pro, can you hear me? If you are there, if you can hear me, please unmute your mic and tell us what currency pair do you trade most? Okay, so Infinite Sources cannot hear us. Then Tega, can you tell us who is using Infinite Sources Pro? Okay, okay, now we can hear you now, Tega.
This place is so noisy, so I can't.
Okay, no problem. Yes, you can. Thank you, thank you. Yes, Savi, I know you're a man of good. I know you trade only good, right? Can unmute yourself.
Yes, that's correct, mentor.
Yes, so we trade only good. Now we know ourselves. So Infinite Sources Pro is here to speak out. So now we are talking about price action and looking at the patterns that dominate our chart. Now, for all I've said so far, we find out that the inch of the currency pair that you trade, there's a particular pattern that dominates that chart. So if you have known the pattern that dominates that particular currency pair they are trading, then the best thing to do is to stick to that pattern, because that is the best thing to do. When you have a winning strategy, there's no point looking for that things to add to it. Just stick to what you have that is working to you, that is working for you. Stick to it. The only thing you have to do is that as time plays out, look at your strategy and see if there's any other correction that may need to be done later on, not at that point in time. Then you can effect that correction. So we are talking about this candlestick that's found here. If you look at how the market plays out, now what we are seeing here was the market came here to the highest high of that previous day. That was where the market went to today. And what happened? The market now what? Price now fell down. Good and fine. Now on coming down, you find that it came to this level that we're having before now. It came down there. Now, if you have drawn your line, just as you're seeing here now, if you have drawn your line, look at it now. If you have drawn your line and place your line here, the market will have activated you. But now, if you have placed it here, which is this place, I entered the previous one. Now, if you have entered here, what would have happened? You would have missed out for this first bounce that took place here. And this is the more reason why we said trading forex is a zone. You trade support and resistance are in zones. You look for zone. You don't trade a particular level, a particular area, no, or a particular figure, no. We trade support and resistance in what? In zone. So those zone is now informing us, okay, good and fine. The market fell down to here. I will enter my first position here, drag my first take profit in what? In 20 pips. This place is becoming too clumsy. Let me delete out some trends here. Yeah, most of them are not there any longer. Already. Okay, all right. Now I entered first one here. If the market should push against me, let's say come down here, I will look for how many pips, 20 pips against me. Good or fine, I would have entered here.
Now, if the market have pushed down here, just as it happens here, this market came down here, reversed a little bit, broke down here, and I'm martingale here, such that I'm having one position here, such that I'm having one position running here, I'm having second one here. This one here, I've entered here. This one I've entered here. The take profit will be here. It would have been a take profit for the first one. Then I'll allow the other one to run from here down to somewhere on that 20 pips, and we'll leave the market. So collectively from here to here, 20 pips, from here to here, 20 pips, that would have what? That would have been 40 pips of what? Of profit. So that is how you apply martingale while you are trading any particular what? Currency or any particular asset that you are trading. Now, many of them that you see trading synthetic indices. I think I was having somebody yesterday who trade the indices. I wanted to open indices chart here so that himself can tell us other aspect of his trading. Andrew, can you hear us? Andrew, or Sys Pro? Okay, or Sys Pro is nowhere to be found. All right. So that is how we trade price action. So price action is very essential, and you as a trader, irrespective of what you are trading, is very essential. It's very important that you understand price action and incorporate it in your trading. So I believe we have said a whole lot of things. We started with trading plan. Why it's essential to have a trading plan, and also we have equally looked at price action and the type of trader that you are. That you are a scalper, a day trader. There are some key qualities that is expected of you to have to exhibit. So identify those ones and ensure that you put them to effective use. If you are drawing your plan, stick to your trading plan, because having a trading plan is a way, is a plus, and it's equally to help. It's going to help you and guide you to remain as a successful forex trader. So this is the much we can take for today, guys. Like I may mention, it's a new year. If it's a new financial trading year for all of us, we have to start embracing a lot of changes that the corrections that we are supposed to effect. Many of us make a lot of mistakes last year. Now is the time for us to correct those mistakes. Many of us will say, okay, I'll wait to 2020 before I do this. Now is 2022 is here. So 2022, new energy, new mindset, new goal. Now is the time for us not to slumber. Now is the time for us to work hard. Consider the economy that we find ourselves. Nothing is guaranteed for us. Also, nothing is guaranteed this economy we find ourselves. So best advice I'll give to you guys is to take your forex trading seriously, because that's where we all can beckon or can rely on, and eventually are going to make a good profit from it this financial year that we find ourselves. So let's not relent. Let's keep pushing. Let's keep fighting, and let's strive hard to ensure that we give it our best. Like I mentioned, it's a profession. Forex is a profession and must be taken seriously. So we're not here to gamble. Forex is not gambling. Here you put in 10 naira, you're finding 500 naira. No. So forex is a profession and must be looked from that same light. So since it's a profession, it has its own defined principle that it operates with. So learn to stick to it. Stick to the principle that forex operates on. Stick to your trading plan. Stick to your money management. Money management will be looked into at another time. Money management, how to martingale, as well as a whole lot of other areas I'm going to look at, will be discussed in our next Zoom class. So for now, yes, we are going to call it a day.
So my concluding words for you guys is, forex is a profession, just like every other profession. It has its own rules, and you must learn to stick to it closely. Bear in mind that there's nothing guaranteed in forex. So there's no strategy that is fully gray. So accept the fact that you're going to make some loss at some point in time. So don't feel that your strategy is not working. No, losses is inevitable when it comes to forex trading. So keep your strategy very simple. You don't need to cluster your charts with different kind of indicators. Just keep your trading strategy very simple, and also to reduce the amount of bets that you trade. If it's possible for you to just stick to your some particular assets, that one or two, that will be more better, so that you can clearly understand the patterns that are being formed there over time, and that in itself will equally edge your winning ratio. Also too, you equally want to try as much as possible to avoid over trading. You want to avoid over trading. The lesser you trade, the more better you'll be, and equally too, you'll be emotionally stable. Always remember that there's forex is more of psychology than strategy. So trade only when you are emotionally okay. So guys, keep learning, keep growing. Above all, self-discipline and consistency is the key and is the watchword in this business of forex. So that is all we can take for now, guys. See you guys in subsequent class. Thanks.